The African Continental Free Trade Area, or AFCFTA, is a transformative initiative with the potential to reshape the continent's economic future. It is Africa's boldest economic project, a testament to the ambition and vision of African leaders. It represents an agreement to create a single unified market for goods and services, spanning the entire African continent. The core objective is to make it as seamless and straightforward for a business operating in Ghana to sell its products or services to Kenya as it would be to trade with its next-door neighbor, fostering local and regional commerce. Historically, a significant portion of African countries' trade has been directed towards Europe and Asia, often overshadowing trade amongst themselves, largely due to the presence of high tariffs, intricate and time-consuming customs procedures, and inadequate infrastructure. The AFCFTA directly addresses these challenges by systematically eliminating tariffs on a substantial 90% of goods traded within the continent, and working towards harmonizing trade rules and regulations across member states, effectively creating a vast market encompassing approximately 1.3 billion people, and boasting a combined gross domestic product of $3.4 trillion. Officially adopted in 2018 by the African Union, representing a landmark decision, the agreement signifies a profound shift towards greater economic self-reliance, deeper integration, and enhanced intra-African trade. It extends beyond mere economics. It embodies a powerful statement of Africa's unwavering determination to proactively shape its own economic destiny and future. The AFCFTA provides a comprehensive framework designed to foster industrialization, stimulate job creation opportunities, and contribute to significant poverty reduction on an unprecedented and transformative scale. As of 2025, it's a living, breathing initiative, steadily and gradually transforming Africa's economic landscape, paving the way for sustainable growth. With nearly every nation now on board and committed to the cause, it signals a powerful and unified consensus for transformative change across the continent. The AFCFTA serves as the comprehensive blueprint for effectively turning 55 previously fragmented markets into a single, unified, and powerful economic bloc, poised for growth and prosperity. The AFCFTA's journey began in March 2018, when 54 African Union member states signed the agreement in Kigali, Rwanda. The agreement came into force in April 2019, after 22 countries ratified it. Early ratifiers like Kenya and Ghana led the way, while Nigeria's 2019 ratification gave the pact major momentum. The COVID-19 pandemic delayed the original July 2020 trading start, pushing the operational launch to January 2021. To test the system, the African Union launched the Guided Trade Initiative in July 2022, involving 8 pilot countries. 2023 was declared the year of implementation, with countries forming national implementation committees to drive progress. By October 2024, 48 countries had ratified the agreement, and at least 7 were actively trading under AFCFTA rules. The AFCFTA has moved from vision to reality, with real trade now happening across borders. These milestones mark Africa's most significant step toward economic integration. Early adopters, those visionary nations that embrace change and innovation like Rwanda, Ghana, and Kenya, have set the pace, leading the charge for AFCFTA's rollout. Rwanda, host of the historic signing ceremony, quickly ratified the agreement, demonstrating its commitment, and established a clear national strategy. As a Guided Trade Initiative participant, actively engaging in this pioneering program, Rwanda is already seeing projections of a significant 3.2% income boost, and an impressive 38% export growth by 2035, showcasing the potential benefits of AFCFTA. Ghana, home to the AFCFTA Secretariat, the central hub for this transformative agreement, issued the first Certificate of Origin, a crucial document for facilitating trade, and built strong support systems, offering resources and guidance for its businesses. Kenya, an East African powerhouse, a key player in regional trade, has exported batteries and tea, 2 of its key products, to Ghana under AFCFTA rules, showing the agreement's practical impact and tangible benefits. Each of these countries has set up dedicated committees, ensuring focused attention, to guide public and private sectors through the transition, fostering collaboration and shared understanding. Other pilot countries, Cameroon, Egypt, Tunisia, are also making strides, pushing forward with their AFCFTA implementation, from expanding exports to finalizing tariff offers. paving the way for increased trade. These pioneers are not just following the rules, they are going above and beyond. They're shaping the playbook, setting the standards for the rest of Africa. Their actions prove that political will and practical steps, when combined effectively, can turn a continental vision into reality, transforming Africa's economic landscape. The early adopters' success is a blueprint, a model to emulate for others. They're forging the pathways, creating the trade corridors, for Africa's economic integration. Nigeria and South Africa, Africa's largest economies, are crucial to AfCFTA's success. Nigeria ratified the agreement in 2020 and is leveraging new infrastructure like the Lekki deep sea port to diversify beyond oil. However, over 60% of Nigerian businesses remain unaware of AfCFTA opportunities, limiting their participation. Still, forecasts predict a 6.3% rise in Nigeria's agricultural exports under the agreement. South Africa, with its advanced industry, is aligning customs systems and using AfCFTA to revive manufacturing and create jobs. The agreement opens a vast, tariff-free market for South African goods, boosting sectors like textiles, auto parts, and pharmaceuticals. South Africa is also positioning itself as a continental hub for vaccine and pharmaceutical production. By leveraging their strengths, both countries are driving regional value chains and setting the pace for Africa's economic transformation. Their engagement is vital for the AfCFTA's long-term impact. The AfCFTA's success depends on broad participation, not just the biggest economies. Kenya's early ratification and active exports to West Africa show the agreement's real-world impact. Egypt is using the AfCFTA to expand its industrial exports and diversify beyond traditional markets. Tanzania and Mauritius are aligning policies and exploring new markets from agriculture to services. Côte d'Ivoire could see national income rise by over 10% by 2035, while Tunisia and Cameroon have made key technical progress. Southern African countries like Zimbabwe and Namibia are projected to gain significantly as they integrate into regional value chains. Across the continent, countries are building strategies and institutions to make the most of AfCFTA. The agreement's success is a collective effort built on each nation's commitment. 4 years in, the African Continental Free Trade Area, or AfCFTA, is beginning to show its promise. The AfCFTA is delivering measurable economic benefits, tangible improvements that are starting to reshape the economic landscape. Intra-African trade could rise by up to 45% by 2035, a significant leap forward in regional commerce. This translates to hundreds of billions of dollars in new exports, boosting economies across the continent. The World Bank estimates the agreement could lift 30 million people out of extreme poverty, offering a pathway to a better life. Furthermore, it's projected to raise incomes for 70 million more, creating a more prosperous and equitable society. By 2043, Africa's GDP could be 10% higher, a substantial increase that will fuel further development. This growth is expected to add $650 billion to the economy, creating new opportunities and driving investment. Countries like Côte d'Ivoire, Zimbabwe, Kenya, and Namibia are poised for double-digit income gains, showcasing the potential for significant economic advancement. Rwanda expects a 3.2% income boost and 38% export growth, a testament to the power of intra-African trade. Nigeria's agricultural exports could rise by 6.3%, strengthening its position as a key player in the agricultural sector. The Pan-African Payment and Settlement System, PAYPS, lets businesses trade in local currencies, reducing reliance on foreign exchange and promoting financial independence. This innovative system is saving billions in transaction costs, making trade more efficient and affordable. Streamlined customs and reduced tariffs are making cross-border trade faster and cheaper, removing barriers and facilitating the movement of goods and services. These benefits are not just numbers, they're changing lives and business prospects across Africa, empowering individuals and communities to thrive. The AfCFTA is already reshaping the continent's economic future, paving the way for a more prosperous and interconnected Africa. The AfCFTA is sparking a manufacturing renaissance across Africa. By creating a unified market, it's attracting investment in factories and value-added industries. Manufacturing exports within Africa could jump by 62%, shifting economies from raw material exports to finished goods. Value addition, like turning cocoa into chocolate or cotton into clothing, means better jobs and more resilient economies. South Africa's industrial sectors are finding new markets, while Nigeria's manufacturers benefit from cheaper inputs and expanded reach. Regional value chains are emerging, with countries specializing in different production stages, from mining to assembly. This interconnected approach builds shared prosperity and global competitiveness. The AFCFTA is not just about more trade, it's about higher value trade. Early signs show a continent moving from extraction to creation. Africa's manufacturing ecosystem is on the rise. Despite progress, AFCFTA faces real challenges. Infrastructure gaps, poor roads, ports and railways, still slow trade and require massive investment. Non-tariff barriers like slow customs and excessive paperwork persist, making cross-border business difficult. Many small businesses lack awareness or capacity to benefit from the agreement. Political instability and regional conflicts can disrupt trade and undermine trust. Overcoming these hurdles means investing in infrastructure, streamlining bureaucracy, and supporting businesses with training and information. Consistent rule enforcement and cooperation are essential. The path to full implementation is complex but not impossible. Collective effort is key to unlocking AFCFTA's full potential. By mid-2025, the AFCFTA is a functioning reality, with 48 nations ratified and real trade underway. Early benefits, rising trade, new manufacturing, and innovations like PAPs are visible across the continent. But the journey is far from over. Closing Africa's infrastructure gap is urgent, requiring billions in investment for ports, roads, and energy. Dismantling non-tariff barriers and building business capacity must be top priorities. Empowering entrepreneurs and small businesses is as vital as signing treaties. Sustained political will and trust among nations will determine the agreement's ultimate success. The AFCFTA is a generational opportunity to reshape Africa's future and unlock its full economic potential. The promise is immense and the journey continues.